To wait or not to wait? That is the question. Stay right there. We'll talk about it.
You were talking about money, right?
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion? Hey, you guys, and welcome back to Millennial Market Talk. And this is another real market talk for you guys. I do appreciate the feedback on the last video that I put out in regards to the supposed real estate crash in Texas. There was, again, great feedback. So I'll continue to bring you guys content that you can take and apply to your everyday life, in addition to mortgage, real estate, and everything else we talk about in related to the market. So that being said, today we're going to jump into an article in regards to waiting or not waiting to jump into the market due to high interest rates. Before we do, let's look at our daily rates. And as always, we are using a Google tool that they provide. As you can see here, there are no advertisements or anything bait and switching you. It's simply a tool that Google gathers all the data from different mortgage companies throughout the United States to provide you, the consumer, an accurate or at least a very fair market analysis of what rates are going on. Now, this doesn't include any kind of points or anything like that. And the best advice, if you are currently being offered anything less than, let's say, a 5%, make sure to read the fine print and make sure that you're checking all of the points and fees that are associated with it. So as you can see here, we are looking at a $300,000 price with 5% down in the state of Texas at a credit score of 720 to 739. The FHA rate for 30 years is sitting at 5.827, with the two government rates above 6% already. So all the chatter about we're just now reaching 5%, they're a little behind, guys, kind of like everything else. We've been above 5 for a little while now. I think it's not going to stop for a little while, which is why I've brought this article to you. It was actually brought to my attention by one of our loan officers, who I'll actually be bringing on to this as well. So let's jump over to our article entitled How to Approach Rising Mortgage Rates as a Buyer. So the article starts with the following. In the last few weeks, the average 30-year fixed mortgage rate from Freddie Mac inched up to 5%. While that news may have you questioning the timing of your search, the truth is, timing has never been more important. Even though you may be tempted to put your plans on hold in hopes that rates will fall, waiting will only cost you more. Mortgage rates are forecasted to continue rising in the year ahead. If you're thinking of buying a home, here are a few things you can keep in mind so you can succeed even as mortgage rates rise. And then it goes on to say how rising mortgage rates impact you. Mortgage rates play a significant role in your home search. As rates go up, they impact how much you'll pay in a monthly mortgage payment, which directly affects how much you can afford. Here's an example of how even a 1/4 point increase can have a big impact on your monthly payment. And I actually really like this as a depiction of what you guys see in regards to the buying power as rates increase. So as you can see here, rates have not been in the 4s for a little while now, but let's start at 5%. Let's say a month ago you jumped in the market and you decided, I'm going to wait just a little bit longer for rates to go down. Well, now you're sitting up around 5.5, 5.75. So looking at that, just from waiting a month, you're going up almost $150 in payment. And this is obviously showing principal and interest only. But you can see that's a huge impact. And if we are forecasting interest rates to continue to rise, it's only going to shrink more and more. So let's get back to the article. And as I continue with the remainder of this article, I want to bring our guest on. So Jody Trevino, how you doing, man?
Doing good, man.
I love having you on here.
It's not Friday, so we'll call this Hump Day with a homie.
Hump Day with a homie?
Right.
Is that what it is?
Yeah.
I like it. Okay, good deal. So welcome to Hump Day with a homie as we continue our real market talk. So Jody, about this article, and I don't want to get into it till I finish it, but let me finish off here. With mortgage rates on the rise, you'll likely seen your purchasing power impacted already. Instead of delaying your plans today, rates should motivate you to purchase now before rates increase more. Use that motivation to energize your search and plan your next steps accordingly. The best way to prepare is to work with a trusted real estate advisor now. An agent can connect you with a trusted lender, help you adjust your search based on your budget, and make sure you're ready to act quickly when it's time to make an offer. Bottom line, serious buyers should approach rising rates as a motivating factor to buy sooner, not a reason to wait. Waiting will cost you more in the long run. Work with a real estate professional to understand your budget and how you can prepare to buy your home before rates climb even higher. So, that being said, Jody, I mean, what are your thoughts on this as a whole?
I agree with a lot of it. I think the big thing is, yeah, absolutely. If rates are causing you to think you're going to wait, don't do it, because it doesn't make sense. Because the rate we see properties appreciating right now is not going to make a difference. In other words, if you wait longer, you're going to pay more, and rates are going up. So it's just going to become less and less every time. I think one thing to point out too is not only have rates gone up, but for our metro area in particular, property taxes have gone up significantly. And so if you're a buyer that's been looking for a while, I'd recommend revisiting your pre-approval to see what it's looking like with new rates and higher property taxes.
That is absolutely outstanding advice, and something that we are talking about here at the office, which is if your lender that you've worked with for, let's say, the past 3 months or longer has not reached back out to you to get a pre-approval or a pre-qualification, visit our website at LaCanteraLoans.com. The market has changed. The reason why I mention that is interest rates. Obviously, you can see in your buying power and how it can affect you, which then directly affects your debt to income ratio and how much you qualify for. So I think folks are also thinking that property values are going to come backwards as well. So when you've got this double fold of property values are going to come back and rates are going to come back, I think it's a false perspective as a whole. I can tell you with the last video that I did and the research that I've been doing, we are going to hit a recession eventually. Absolutely. But history has shown that there have been 2 scenarios to where we got to this point and didn't hit a recession. So rising rates is intended to slow down inflation. Yeah. If they continue to rise and people continue to purchase, it could actually work and we don't hit a recession. Right. That being the case, it's going to leave you as the first-time home buyer or the home seeker stuck in a situation to where you're either renting forever or you've got to move to a location where it's more affordable for you. Right. And that may be outside of Texas. Nobody wants to leave Texas.
No, everybody wants to come here. Real quick, I just want to say that in my opinion, it's going to be more of a correction than a recession. And the reason I say that is the way that property values are rising, and at least in San Antonio specifically, 20% last year, expected 15 to 18% this year. Right. That's not sustainable. Right. And so markets have to be corrected. And I think that's what interest rates are doing right now, is slowing the market down a little bit so we don't overdo it because we can't sustain it. Sure. And we get back to normal and rates come down again.
Well, I mean, I even take it a step further as we close this thing out. This recession is going to be a little bit different than any other recession that we've seen, because we've got a low inventory in homes, a high demand in homes, plenty of qualified borrowers that are still purchasing despite higher interest rates, that are still hanging around despite the lack of inventory. And what that means is values continue to rise. Right. Now, you are correct. I don't think we're going to see the double-digit increases in our value. But historically, I mean, Texas has been at about a 4 to 6% increase year over year naturally. Right. So that's something that you as a potential homeowner could be missing out on. Yeah.
One thing I've noticed, and I don't want to assume anything, right, or say anything too soon, but builders have really benefited from the market as of late, or over the last 18 months, I would say. And most of them won't even contract right now. One thing I think that is interesting and indicative of where we're headed when I talk about correction is builders went from not contracting to today. I've been looking at a lot of new construction. There were a lot of price reductions. Sure. And we haven't seen that in a while.
Yeah, that is very true.
It's always more.
And that is a sign of one of 2 things. Either the market's slowing down, or they were overpriced to begin with and they're correcting, like you said, or they're having a lot of fallout due to the higher interest rates, meaning we've got a whole bundle of people that we've started homes for that were all pre-qualified at 3% or lower interest rates
8 months ago or something.
Well, we look at it, the average home price in San Antonio is around $300,000. You're looking at this, if 0.5% increase changes your payment $150. Think about 2% increase, 3% increase. You may not qualify anymore. So in order for that home to be sold, do they put it back on the market and take another shot at it, or do they bring it down and get that inventory gone and on to the next?
I guess the last thing I'll say is, if you're thinking of waiting, don't do it. I understand rates are higher right now, but I mean, let's be super conservative. The experts are saying 15 to 18%. Let's say we only get 7 to 9% over the next 12 months. That's going to benefit you way more than waiting for a lower rate, and rates will probably be down at the time anyway.
To allow you to refinance.
Exactly.
I agree 100% with that. That's also why I'm encouraging current borrowers not to even pay points if they don't need to.
Right.
So that being said, guys, we'd love to hear your comments, and we'll respond back to them, give you guys our thoughts on some of the feedback that you're providing. But if you're liking what you're hearing, seeing, getting some value out of this, please like, subscribe, share with a friend, and we'll catch you on the next one.
You were talking about money market.
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?